You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
And welcome to the option block. If you are not hearing the baritone, sultry voice of Mark Longo, fear not, you are still in the right place. This is your host for today, Uncle Mike Tosaw, even though I may or may not be your uncle. Most likely I am not. But today it is going to be myself and my partner in justice, because I don't have partners in crime, and it's my show today, so we're going to do the show for justice and not for crime, for the force and not for the dark side. My partner, Mr. Andrew Giovinazzi. Andrew, how are you today?
It is lovely to be here. I'm good. I wonder what Longo would say. We're doing the show for the forces of good and not for the forces of crime. I like that. We're getting the show started off on the right foot.
That's right. That's right. So, well, you know, deep down under that sultry voice of his, there's an Anakin Skywalker in all of us, I think, and you know, maybe we'll have that with Mark Longo too, for him, all of his dark side stuff. So, but the Force is with us today, that is for sure.
It is. He does talk a lot of dark side, though, doesn't he?
He does. I've noticed that. He's a man of many words. He's the human thesaurus, and there are a lot of Star Wars references I've noticed with him. So, nonetheless, you can't blame the guy though for his vast knowledge of words and his love for Star Wars.
We climbed into a rabbit hole quick. We didn't even get out of the intro.
Well, since he's not here to claim umbrage, then it's our show. What are you going to do, huh?
We can just run with it. I think that's a great idea. Okay, well, maybe.
Well, with that, what are some things that you are seeing in the market today, Andrew? We got a lot to talk about today. We got the Fed. We got there's always something to talk about in the VIX. We have energy. We have gold getting the royal tar beat out of it. We have financials going up. We have the Dow not quite hitting 20,000. Andrew, where do we start? Help me out here.
We can start with VIX because for a while today it was rallying, the market was rallying, vol was rallying, because you get to the point where volatility gets so low that when the market rallies too much, the vol kind of has to rally with it. It's a strange I don't know if it's anomaly is the right word, but it is a funky function of the market once at the money vol gets so low, and then we're taking off. The market's taking off, so the vol has to go with it because realized vol is so high. Where's Don? Where's Schlesinger when we need him to explain that too? But we were up almost 1% and we stopped. So I think this is starting to feel like, I don't know, maybe the election rally is starting to slow down. And it seems like we kind of cycled back into that old where, we buy some of the financial stocks. The banks are up again, setting some new year highs. We had the commodity stocks started to kick a little bit today, a little bit. So we had a bit of a bump in Russell, almost up 1%. So it started to look like the old versus new, kind of that funky rally again. The Fed saying they're going to raise rates. That was such a surprise. I think it surprised everybody that maybe they might raise them a little more. Why they keep forecasting all this stuff into the future, I don't know, but they think they need to. So they're saying rates are going higher, and with that, you're right, and that would leave you to your favorite subject. So technology took a breather after rallying for several days, but that takes us to the topic of your shiny stuff.
It does, and the shiny stuff. This is, there's an old song, "Thank the Lord for the Nighttime." And what I've done over the course of the last couple weeks is I'm saying, thank the Lord for put options. We actually, we're hedged at the 115 level, and I haven't even rolled down. I mean, I have not been doing stuff. It's just because of the fact that it's been coming straight down.
Right.
And I've been saying, okay, well, if I get some type of reason to believe that gold is going to come up in the near term, then I'll do something, but I do not have that reason for the near term at this point. So just over the last few weeks, or pretty much since the election, I've just been sitting on my 115 put in GLD, and I'm going to just exercise it tomorrow. Unless we get a 10% rally in gold, that's just going to be automatically exercised tomorrow. And then I would like to possibly get back into it, but I'd like to see some type of stability. I mean, I like the idea of getting in maybe if we go down to the 100 level, just because it's a key number, and that's the low of the last year is the 100 level in GLD anyway. I think I'm looking at it's $100.23 is the low. And if I can get back in at that, that would be very exciting to me, but even at that level, I would still maintain a rather tight stop loss, or pretty tightly hedged in some way, shape, or form. So
the 99 puts.
There you go.
I will give it a little room to go down, but not much.
And then sell the 101 covered calls. Yep, I'm in gold, my gosh.
I'm back in. I'm in all the way.
I'm all in, baby. We got all of it from 100 to 101. No, but I'd have to until I see reason to really start getting back into it. It's the beauty of options. You can be so insanely royally wrong, like I was on this, and it really doesn't hurt that bad. So that's one thing that has been pretty good along these lines, is the fact that the puts have done their job. A couple other things of note with the Fed. With Janet Yellen, I know, of course, the Fed is never politically motivated, but let's be conspiracy theorists just for a second. With Janet Yellen, former Clinton cabinet member, I tend to think that she politically leans left. Now, that's just a theory of mine, but so I'm guessing that she did not vote for Donald Trump. I can't prove that, but that's just my theory. With that being said, let's say that you're a Fed governor and you're trying to work with or protect the current president that nominated you or that got you your job, Barack Obama. And maybe you're going to be a little bit more hesitant to raise rates because of your fear that it's going to stall the economy and make your boss look bad, and then he ends up firing you. But Janet Yellen has another year left in her appointment until January, a little over a year, until January of 2018. Now, with that, do you feel that maybe she would be more apt to start raising rates a little bit more aggressively because she probably thinks she's going to get fired anyway?
That as a conspiracy theory is quite excellent, actually. She's like, what the heck? I'm on my way out, and let's get these things up. I can actually I can see that is possible, although I'm not quite sure that it would be spiteful, like a spiteful raise. Because I think, I mean, from what I saw about the raising, it's more like like maybe it was like 10 basis points more than everybody expected over the year, something like that. So it's like a 10 basis point spike raise. It's not a 75 basis point spike raise. Maybe something like that. Just a little nudge. She's just doing a little nudge just to say, hey, I'm here and I'm still watching and I can still raise these bad boys. Maybe it was just a small shot over the bow. Maybe.
It could be, but let's go. As a parent for my kids, I like to do what's best for them, obviously. But if my kids need to get a shot, take their medicine, or whatever the case may be, I do it. I make it happen because I'm a parent. That's my job, to do things to my kids that are good for them that they don't like per se. But my parents, on the other hand, when they work with my kids, my parents do a wonderful job babysitting my kids, but I'm going to tell all of our 10,000 listeners a deep, dark secret. Grandparents love to give their grandchildren candy and send them home after they give them candy, and lots of it. So with that, it almost feels like, from the standpoint of, well, Barack Obama was her boss that got her job. At that stage, then she's not going to necessarily give him candy, so to speak, or give the economy candy, so to speak. Well, let's fake it. Bernanke did his share of that back with the stimulus.
Oh, my gosh.
But
mainlined it. That was mainline candy.
But with that, Janet Yellen is not necessarily going to give the economy the medicine it needs to function more. She's going to stall on it. Because maybe her motivation is that I want the president to look good, but now that Trump's in office, someone that, once again, I can't prove it, but I'm willing to bet that she didn't vote for him. Now that he's in office, now maybe she's willing to give the economy the vaccination shot, the yucky tasting cough medicine, or whatever the case may be, because now he's the one that's going to get the shot and have to deal with the people complaining. How come the stock market's not going up 40% on a year?
I think that is definitely it's worth looking at, and I think maybe that's some people that are just kicking the crap out of gold lately. Maybe they think that too. Having aggressively raising rates. Also, don't forget, what these rates are going to now cost the government more borrowing, right? So. The government's going to have to stop spending money because all of a sudden it's not free anymore.
That's true.
Yeah, it is a little bit wacky that way. So I think it's tough love has been needed for a while. Because realistically we had bounced back from the financial crisis, a long time ago. The dip was bad, but things started recovering after TARP, and for the most part, you had economic growth because everybody pulled back so severely. Once there was, at least the TARP was clarity. I mean, there were some other problems with banking and regulations and stuff like that that made it maybe a little more difficult. But, clarity helps. So the fact that rates could be going higher or a little bit higher or back to where a normal people are being charged for money, as soon as the market understands that, it makes life a lot easier. And I think we are headed that way. And the equity market does not mind, as far as I can tell.
No, with the markets surging like they have over the course of the last month, no doubt about it. But with that, we are going to now transition from the conspiracy theorist talk, the Mark Longo degrading, and go on to our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the Odd Block. This is the section of our show where we look at things that just kind of appear a little bit, how do we put it, odd. And with that, I'm going to turn over the reins to our resident odd man, Mr. Andrew.
the one of many. I think to be on this show, you have to be a little odd, no matter what.
It was definitely in my resume, that's for sure.
It was part of the description when Longo asked. He's like, so are you a little odd? I go, yeah. He goes, oh, you'll fit right in. So a trade we have today, we have a few like we normally do. This is a trade that boggled my mind. These are more like boggly for kind of the market movement we had. And I'll just say now there's 600,000 XLF calls traded. It's as far as odd, there was no real one order I could pick out besides just a massive amount of rolling and rolling up in the XLF. Just only on November 8th, the XLF was 1960, and now it's trading 2360. That's 4 handles. It's 20%. That is so gigantic. It actually is back to where it was pre the dividend when they did that special dividend. That is an enormous change in value in the XLF. So most of that action actually, though, is calls rolling and rolling up. Some closing, some just massive, massive winners. So I wish I could point to one thing, but the volume in that particular contract is still very high. Volatility came down a lot today in XLF. And when I look at the it's trading 700,000 contracts a day, which is like right up there with the VIX, which is enormous and incredible when you think about it, because it used to be about a 100,000 contract a day product. The lately volume average is 200 today, 700,000 with 660,000 calls, and most of what I could tell is they're just rolling them up. They're closing some calls, they're rolling up to other strikes, and it's working. That's all. That's all I can say. And it doesn't appear to be over. So that's the action. Nothing really was a dead standout though for volume on it. Unfortunately
because we had that trade a couple weeks ago on XLF. What was it like? Someone bought a ton of 23 calls or something like that.
They bought the I believe it was the Jan quarters. Let's see, it was the Jan quarter calls. They bought 250,000 of the Jan quarter calls for, I think it was 18 cents at the time. And they haven't made any money on them yet, but they're still holding on to them.
At this rate, that's still not quite out of the question.
No, not at all. It's only it's $1.50. It's about 5%. And I think, and it went up with some stock as well. I thought they did put up a fairly large block of stock against it. I've actually been following the long gamma trade. They're down about $1 million on the position right now, from what I can tell. So now they probably got a little scalping action. I think they probably bought a little XLF when it dipped yesterday. If they were savvy on the position they had, but I had that going up delta neutral, so it was just a massive ratio. It was basically, you think of it like it would be 5 calls. It would be 5 calls per 100 shares of stock. That was roughly the ratio that it went up at. So, but as of right now, they are not doing that well. Although it could change it could change pretty quickly. As we have seen.
No doubt about that.
So if we go now to some other odd activity, Michael Kors. Okay, if you pull up Michael Kors, K-O-R-S, right? The stock today is down $1.29. It's just sort of languishing around. It's sort of it hasn't really moved from the 45 handle since mid-June. It's just let's just call it stuck. Right, it's
just kind of channeling there.
It certainly is. So somebody traded the Jan 55 52.5 call spread. It is $7 out of the money. I don't think they're picking up an earnings cycle. They're not even picking up an earnings cycle with the spread. And what I can't figure out is what the heck they're doing. Their open interest on the 55 calls is 10,000, but 15,000 of the Jan doubles traded, and 11,000 of the Jan 52s traded. Both trades were through the bid, meaning they look like they sold the Jan 52.5s below the bid because they traded some on splits. It was 8,000 and 2,000. It was a below the bid price. And they sold the Jan doubles, a 10,000 lot, at 10 cents. So did they sell those at 10 cents and maybe they got a fill at 52.5? It is just the strangest, most out of the money 20,000 contracts that are totally hapless and hopeless, unless the only thing I could think that could be as well is somebody's just trading a stupid, selling, even though one side looks like the open interest would work on the 55s. They're just selling a stupid and hoping to make some money out of it, I guess, and trying to collect 50 cents, which is possible. And they might be long the stock against it, but it is just it's a very odd trade, because if it's a spread, it could be a roll down to the 52.5s again, but the prices were all through the bid, so really, really difficult. And it could be it's an odd, very out of the money spread for 20,000 contracts that made somebody some money, but I can't figure it out for the life of me, to be honest.
That's an odd one, to say the least.
It's definitely odd. Another one we had, which is a bank stock, we profiled it in unusual activity, I think, yesterday. A trader bought a lot of the 18 calls in KEY Corp. So KEY's the symbol, KEY. Last I looked, it was up 20. Where did it close today? It closed up 23 cents to 1837. It's like all the other banks at the top of its 52-week range, and I saw a bunch of the DC18 calls go up. I think the buyer yesterday, they paid, I think, up to 53 cents. They're getting out. They got out for around 47 cents on at least half the volume, but very scattered volume. So I thought, okay. They're just kind of taking their loss, or they're taking a small loss on a part, and they're going to hold on to see what happens on the balance. That's what it looks like to me. They've got one more day, so they figure, what the heck, I might as well go for and punch through and see what I could get. Another trading key that was actually semi-interesting, and I think this is probably we looked at something similar in our chat room today, just starting to sell a little juice at some of the banks. Because it doesn't look like they're going to zero. The rate picture is a little set. And it looks like they sold 7,000 June 2115 strangles for near $1, about 89 cents. That is a much bolder premium sale than anything that we were looking at, but again, they're basically selling where the stock has come from, the 15 put, and they're selling a call that's another 20% out of the money. So it doesn't look like an unreasonable premium sale, but I think given how far the banks have run, the implied vol is pretty high. It doesn't look like an unreasonable trade by any stretch to sell that.
No, I wouldn't think so as well.
And last here, I thought this was interesting. UUP. Is the basically the Power Shares dollar index. It's trading at a one-year high now. The dollar is just screaming, obviously because of rates and I guess the election and everything else. Who would have thunk it? But that's what it is. I had a trader. It looked like selling 32,741 UUP DEES 23 cycle. 26.5 calls for 24 cents. So ADV is around 20,000 contracts. The open interest on this strike was 25,000 or 35,000. So I'm pretty sure this was a close. I did go back and see that this customer, I think, paid 8 cents for these not very long ago. And lo and behold, they're selling 32,000 contracts, and they made 16 cents a contract. That's not bad 32,000 times.
Not at all.
I mean, you do that, right?
Yeah, that'd be. I would. That would be worth my time.
You think so? I was like, okay, maybe Longo's getting long the dollar. Maybe he was long the dollar, and he just got really long the dollar.
That would not surprise me.
Anyway, so it looks like somebody is closing. They made a boatload of cash, and somebody's going to get some. Maybe somebody's going to get nicer Christmas presents this year.
That would be nice for them, I am sure.
And I think that ends again a day where there was some activity, but there wasn't tremendous, I would say, kind of tell option activity. More just kind of vanilla, just sort of vanilla churning, but nobody really jumping on the bandwagon, which it makes a little sense when the market's already made a move like it has.
Makes sense, that is for sure. Well, that concludes the odd block for today. Now we get more normal back into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
And welcome to the strategy block, everybody. Today, as promised, I'm going to do a strategy on choosing an advisor. Now, of course, I am a little bit biased. I am an advisor, but I do understand that I'm not able to manage everyone's money in the United States of America. But with that being said, of course, I'm going to be a little bit more biased towards an advisor that thinks more like me. So full disclosure, that would be the case. But with that being said, I want to go through some things if you're looking to work with an advisor and questions to ask on whether or not this advisor truly understands options or not. Step one, make sure that you're the one interviewing the advisor. Hopefully you heard of them from a referral from a friend or from a reliable source in one way, shape, or form. If you just go to the yellow pages and do it that way, that's difficult to do, to find someone that way. Not saying it can't be done, but it is difficult. So with that, make sure you choose one and make sure that you're the one interviewing him. Things to ask the advisor. You can ask him about performance. That's fine. A lot of times advisors aren't really able to talk about past performance unless they have a specific audit of a certain product. I personally, I'll tell people good trades and bad trades, and I'm very upfront with people with the good and the bad, but I can't specifically say this made this amount this year, this made that amount this year, just because it's not audited. And most of my clients are in different things. So it doesn't make sense for me to audit myself as if I'm a fund manager when in reality I'm an advisor. Now, once again, I'll be very straight up and honest with people, but in terms of performance reporting, that's something with which I don't do. Now, here's what to look for when you're talking to your advisor about performance. He may or may not be able to talk about it, just depending on his or her compliance, but if he is constantly bragging about his system and how it consistently beats the market, this, that, or the other, that's fine, and there's a very important spot for that. Whether or not they're using options or not, he needs to sell himself, I get that, but look for if he describes some type of weakness in his system. Nothing's foolproof, folks. I don't care who you are, I don't care who's in this market or who does what. There's no one that's always going to consistently be a winner. There's going to be losses at some point. If Jesse Livermore can make a loss, then so can this advisor that you're interviewing with. I don't care who he is. From my experience, the people who claim more legitimacy are the ones that spend more time bragging about their losses, quite frankly. Overall, trading's a game of winning and losing, as is investing. But the idea is that you want to win more than you lose to achieve your goals. And if you come across a person who says that they consistently do this, that, or the other, then they don't describe any weakness to what they're doing, then that's a big red flag. For example, my co-host here, Andrew, he's consistently beaten the market, and if I'm not mistaken, you've actually, in your trading career, you've actually still have not, have you, in your trading career on the floor, you've never had a losing year, is that correct?
That is correct. Crazy.
Okay, so
had plenty of
it is
crazy months though.
Right, and so you want, if you sit and have a beer with Andrew, you're going to hear some win stories and some loss stories, and it's going to be an interesting time, I guarantee it. But the point is that Andrew's going to be real. He's going to tell you real stories about real things that happened with real money, and if you don't hear the bad side of it, then it's probably not real, from my experience. It could be, but that's a major red flag. Now, the next part of it is that ask the advisor what some of his strategies are. Is he mostly a mutual fund guy? Is he an ETF guy? Is he an individual stock guy? Is he an option guy in a lot of ways? Now, I personally have a lot of clients, and I'm a good amount. I can always use a few more. You never know, but not every one of my clients has options exposure. A lot of them do, just because of the fact that if you Google search my name, and most of my clients I've found through option mediums, so a lot of them do have option exposure in one way, shape, or form, but not all of them. Find out what the advisor does. And when doing so, let's say he's a mutual fund guy. Well, okay, how do you make your money? Do you, if he says that primarily he uses mutual funds, ask him, are you based upon commissions, or are you based upon a fee? I'm not saying one good thing or one bad thing either way, but my personal choice that I've made as an advisor is I'm fee-based, meaning that I can put you into stocks, bonds, options, ETFs, mutual funds, bubblegum cards for that matter, and I make the same amount of money no matter what. My motivation is to make your account go greater so that my annual fee becomes greater. And if your account goes down, my fee goes down. So with that, make sure that you have an understanding of it. If they are fee-based, then they're probably going to tell you something similar to what I said. But if they are commission-based, meaning that they get paid for selling you an annuity, for selling you a mutual fund, whatever the case may be, if that is the case, then ask them what are some of their rules. How do they safeguard against being motivated to just sell for commission? And it's very possible you have a very honest advisor that is on the commission-based side of it, but make sure that he has a policy and a procedure to make sure that he has your best interests in mind. Now, let's say the advisor does say, I like to use options. Well, if that's the case, question number one that needs to come out of your mouth is saying, okay, so what strategies do you do? And if he says, oh, I do covered calls, right there, you need to have this question in your hip pocket ready to ask right away. And the question that you ask, if you're with a covered call guy, say, oh, well, do you believe in selling short puts? And if he says, no, that's too risky, sprint as fast as you can out of there, holding your wallet as tightly as you can, because that is a surefire sign that this person that you're talking to knows nothing about options. Have that in mind. Now, with that being said, if he says, well, I don't do option trading personally, but I allocate to funds that do, that's okay. If he has a basic understanding at that point, that's fine. But if he's trading options themselves, whether they're collars, whether they're covered calls, whether they're spreads, whatever the case may be, make sure that he knows what he's doing. And when he says covered call, say, oh, well, do you ever do cash secured puts? And if he understands that it's a synthetic, it's the same thing, and says, oh, okay, well, we'll sell a put to get into a stock, and maybe talk about a wheel strategy or something like that, okay. Now, the next part of it is say, oh, well, do you do anything with vertical spreads? And at this stage, if he does do something with vertical spreads, say, okay, well, what do you do? The same way that you ask that question to see if he has an understanding of it is, let's say, oh, I like to sell put spreads. And he goes through what a bull put spread is, how you can collect income on it, but you have the maintenance requirement in there as well. That's fine. But then say to him, oh, well, if if doing a call spread is ever of better value, would you ever do that with the same strikes? And his answer, no. But if he says, no, because I like to collect income. I don't like money going out of my account. I like income coming into my account, so that's why I do credit spreads and not debit spreads. And if that's the case, same thing. Run as fast as you can. But if he has an understanding that those are synthetics, then he's probably okay. So with that being said, that concludes my thoughts on what you should ask for what you need to know for an advisor. If he's working with options and you want to have him work options in your portfolio, he's got to know what he's doing, folks. And if he doesn't know what he's doing, then I think you need to go to another advisor. And with that being said, that is the end of the strategy block for today. All right, folks, it is about that time. The show is almost at its conclusion. We are going to ride around the block. So now that the Fed has made their announcement and we don't really quite have the same events coming up for the end of the noteworthy as the Fed, at least from what I can tell, unless we have a surprise. Andrew, what are you guys watching over there in the pit?
We're watching just as usual VIX futures, what they're pricing. They're still like the January future is relatively high, with VIX is trending toward 12. So I would expect that to start to fall apart a little bit over the next few days. We don't have announcements. The Fed has announced their policy. The president-elect pretty much has his cabinets, and it's kind of a getting it done at this point. The ECB is kind of set their policy, and it's see if we can get the world back to some sort of normalcy as far as budgets and interest rates and all that kind of thing. But we don't. As for the first time I can remember in a while, there's just not a lot on the calendar. Does that mean like anything could happen? Something out of China or some. The FXI has been a little weak lately, to be honest. So yeah, could something like those things happen? For sure, that could happen. But at least as far as a calendar items, we're running out of those. So I still think we could see vol lows at least touch. We saw 11.5 on Friday. It would not surprise me if we saw that again. If we have another day, kind of like today, where the market sort of plods along, there's a little bit more buying in the financials, stuff like that, we can see some lower vol. We have a lot of people in our room that think the banks are going higher. So that's looking at some short premium in there, mostly because volatility is relatively high, and I think the big move is. It's hard to call something over, but you'd have to think it's got to start slowing down at some point. So this is as good a place for it to slow down as any.
Got it. All right. Well, that is the end of our show for today. One thing that I'd like to point out, I know we give the guy crap and we give him a hard time when he's not on the show, but I do want to give a major shout out to the business, the website, the thing that is actually a very good thing, and that is the Options Insider Radio Network. Folks, there's a ton of shows on here, and if you can't find the content that you want on this network, then I don't know what you're looking for, quite frankly, because it amazes me the ideas that Mark Longo comes up with, and like I said, we poke fun at him a lot, but the reality of it is that if you want options content, there is no better place in the online world to get it. My favorite thing that I always talk about on the show, I have the Options Insider Radio Network app on my smartphone, and I'd highly recommend that you do the same. There's plenty of other ways to listen to the show, but that's my preferred method. But go to the website and make sure that you take a look and see everything that's going on. Speaking of what's going on, Andrew, it's the Option Pit. What's going on?
At Option Pit, we're going to launch our vol course in January. We have postponed our interest rate course, our Saturday class. I think mostly because maybe everybody's out of town. But we'll probably be doing kind of an easy version of that in the short future. And also look for notes for anybody that's a subscriber to Option Pit Information. You'll be getting a end of the year sales deal because it's the end of the year and it's Christmas time, and everybody should give the gift of Option Pit.
All right. Well, with that will conclude our show for today. If you are looking for a financial advisor and you had use some of the questions with someone else that you heard me tell you to ask in the strategy block and you don't like the answers that you get, feel free to give me a call. Or if you just want to talk in general, feel free to give me a call as well. I am at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. With that being said, that is the end of our show for this week. We got the holidays coming up, so we'll have a lot of fun year-end things coming up on our show like we always do. But in the meantime, I'd like to thank everyone for coming and wish everybody well.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.